So guys, today I'm going to be showing you how I made $300 trading EURUSD with a very simple strategy. So quickly going into it, we can see that EURUSD was actually forming high lows and we did reach this high. Now in the other video I posted, we did have a similar trade in a way, which we took shorts from this resistance zone here. Well, it was a similar sort of case with EURUSD. Okay, wait, let's make that line straight. So basically, obviously we ran up, had quite a big run up, and obviously when you're running up so aggressively, you're gonna come to a point where it's got to have a bit of a retracement or a pullback, etc. And clearly this momentum slowed down when we came to this resistance. Okay, so what I was looking for, right, so I saw we did close above this high. Okay, was this an inducement? And the reason I thought that was because, one, it wasn't an impulsive close. We didn't have a big close above this high. Okay, we had a little close above. Okay, so if we look at this high, okay, didn't have a big close. Okay, we had a tiny close. All right, whereas if we zoom out as well, we can see this major resistance point, which obviously caused this major downtrend before, well, major bearish momentum before. Clearly there's a lot of sell orders up here. So look, we look at this resistance level. Oh, whoops. If we look at this resistance level here, came up here. Okay, momentum instantly slowed down. Okay, instantly volume stepped in, engulfing this candle, right? So depletion broke below this candle low, and then the reason I got my entry was I scaled down again, like I always do, get a better entry, and I saw this area of resistance to be here on the lower time frame. Okay, so we broke and retested this, depleted, and we also had a bearish low time frame break of structure. Okay, so I entered on this candle break. I did enter potentially a bit early, but I saw the volume stepping in on a 1 minute, I think. So I was sort of like, all right, get into this. SL is going to be wide enough so I can account for whatever. We had about 12 pip stop loss and a 26 pip TP, so it was about 2 to 1. Yeah, so I entered off of here. We had SL above the high, TP at support, which was here, and obviously, yeah, price carried on melting. Okay, that's fine. You know, we got out. Okay, we took our profits. We weren't greedy, and that's fine, because like, I'm not always going to be staring at the charts. Okay, right, I'm not always staring at the charts. Am I going to think, oh, this is a substantial level for me to hold till? Potentially. But am I going to hold out that long? Am I going to be able to monitor price? Okay, so I put realistic TPs, okay? So realistic TPs that can hit without me having to be on the charts, basically. Obviously, we broke below this low, created a new low, which was nice. But then we did retest up, formed a lower high, which is perfect. That's why we gave it a bit of room above this high and structure. So clearly price wanted to retest into this resistance level, okay? This resistance level. But it's fine, it doesn't matter. Our zone was valid, just got broken above, potentially for a liquidity grab, because clearly once we broke above this, we did sell off. But that's why we gave it a good bit of room. So obviously price sold off. We had this major big bearish engulfing, and then we also sold off again, hit TP. So yeah, this made me about $300, okay? So this was a very simple setup, but very effective. As for anything I do, okay, so like everything's so simple in trading. I feel everyone overcomplicates it with ICT. I'm not going to go down that rabbit hole, but you know, everyone's trying to do everything, okay? Keeping it simple, key levels, market structure, where does price want to go, where is price reacting, okay? Very simple stuff. Obviously, we could have added a Fibonacci here where we came up into this discounted range, and we also did come into a little discount between this little swing. Did we? No, we just about touched it. Okay, so we just came to the midpoint, but this was clearly the discounted range we wanted to mitigate before selling off, and that's fine. You know, that's why we gave it room. Obviously, with this simple strategy, find another example as we did before. So we could have seen here, this is a sort of trade I could have taken with my sort of similar strategy. Okay, so we broke below the structure, have a major point of resistance here. Price found a new low. Obviously, we did create support here, but this is minor. All right, so we ran up, mitigated this resistance zone, depleted, forming a lower high. This is important, guys. We formed a lower high. All right, we didn't break above this high. Structure hasn't really shifted. This isn't major structure. So obviously, this resistance zone got mitigated. We depleted, formed a lower high. What we could have done is enter off this low time frame break of structure into here, sell above here, right? And where can we place TP? This I usually aim for a minimum of 2 to 1 though. Where can we target? That's actually substantial. Obviously, this is sort of like a lot of liquidity being rested here. I don't really tend to trade liquidity concepts, but it's a key idea in the same sort of thing. All right, 2 are there. Boom. see, very simple stuff, right? Just key levels and wait and see how price reacts. It's fine if we don't respect this zone, okay? It's fine if we break up, because we can play longs to the upside, because look, that structure's been shifted, okay? It doesn't matter, right? So we can play longs now. We could have gone, okay, I want to see a big bullish move up, not a small move up, because this could be an inducement. You get a nice impulse up, you retest into this zone for where we broke out of, but then we play it to the upside. What, maybe targeting this resistance, okay? This key level, whatever you want to call it, supply and demand, whatever you want to call it, it doesn't matter. It's just a key level, okay? So yeah, you got to be very optimistic with how the market plays out. You don't have to know everything. I think people overcomplicate it with thinking they have to know where the market's going. It doesn't matter, okay? You don't have to know where the market's going. As long as you have your edge and you've tested it, you back tested it, you got your hours in, you know, you're going to have that edge. But like, you don't have to know where price is definitely going to go. You just hope that your edge plays out and your probabilities are going to be in your favor as long as your strategy is profitable. So it doesn't matter either way, okay? It's like you can be profitable with just flipping a coin, you know what I mean? Risk reward and win rate paired. So yeah, just keep that in mind. So I hope you guys enjoyed this video. Make sure to like and subscribe, all that fun stuff. Hopefully this helped you guys, and yeah, I'll see you in the next video.